Okay, this is part 3 of the Accounting Cycle Excel project. So just to, if you're popping in on this one, we've already done all these normal entries, step 1. Step 2, we posted those to the asset ledger, liability ledger, and the stock dividend revenue expense ledger. Then we went back and did these adjusting entries down here. And we're not going to post them to the ledger yet. We're going to go ahead and use the trial balance to kind of see how things are working before we do our adjusted balance. So what we're going to do here is continue with the process of, instead of typing stuff in, just pointing. But now instead of pointing to the journal, we're going to be pointing to the ledgers. So we go to the ledger assets. Cash is 242. Prepaid insurance. Where are you? Unadjusted. So choose this one up here because we're going to end up having a different one for the adjusted trial balance. The building is in right here. That doesn't get adjusted, so that's fine. Now, accumulated depreciation, it's a contra asset. So it's up here with the assets, but it has a credit balance. So we're going to point to there. Land is just an asset with a normal debit balance. It does not get depreciated. Income tax, so let's go to the liabilities. Income taxes payable, vendor payable, major maintenance co, 5,000, interest payable. And again, we're just going to the unadjusted balances. And you have to make sure that's where you point because a lot of these are going to change after we do the adjustments. So 150,000 in unearned. The loan payable is 800,000. Common stock, which is a normal credit balance, 300,000. And that account doesn't get adjusted, but dividends payable is a liability. Here it is. Dividends. Whoops. So dividends, that is a credit balance. Rent revenue is a credit balance. That's up here, unadjusted. It doesn't have anything yet. Now the expenses are debit balances. The maintenance expense, unadjusted. So you're getting the idea. Insurance expense, unadjusted. Unadjusted balance, right there. Income tax expense, unadjusted. Right here. Interest expense, unadjusted. And this is a little bit unusual. You know, it's the first year, so I gave you kind of a simple setup here. Interest expense, I'm in the wrong one. Interest expense, unadjusted, 0. And depreciation expense, unadjusted, should be 0. There you are, unadjusted, okay. All right, so now we have to put the adjustments in here. Cash, 0, no adjustment. So prepaid insurance, is it going to be decreased or increased? It's going to be decreased with the adjustment. So I'm going to go straight to the journal. So all we're going to end up doing is putting these, you know what? I think it's better to start down here because the way this thing is set up is you have the assets, then you have the liabilities, then you have stockholders' equity accounts. And you know what? I'm going to insert that we don't have is retained earnings. And this is 0, and we're not going to adjust it. So it'll end up being 0. Okay, but I just want to put it in there for completeness. And I should move here, dividend payables to here. Okay, So we got the liabilities, common stock accounts, and these are all temporary accounts here. Okay, so you start with dividends, then we have, if you had more than one revenue account, those would be together, and then all the expense accounts are together. Now, the adjustments are to revenue and expense accounts. So let's go ahead and do the adjustments here, and I'll show you why in a second. So we know the adjustment to rent revenue is going to be a credit. I go to the journal entry, here's the revenue, and I post that there. Now, whenever I do one, revenue or expense, then I'll do the other side. So I know that this is unearned rent revenue, so I always use the equal sign. All right. So we see that these two are equal here, and then if we put in a debit and a credit that are equal here, then these should be equal. Okay. Now, if it's not the same number, it's definitely incorrect, not the same balance. But you could have equal balances, but two offsetting errors. So if I messed up and put 22500, well, these equal, but I just, did what's called a fat fingers error, just hit the wrong number. Okay, and actually with this one, I'm going to point, and one of the reasons I point to the cell references, I tend to make fewer errors when I do that. So all these expenses are going to be debits. So, well, actually this one is 0. There's no adjusting entry here. And the insurance expense, right here. And then I'm going to do the other side, which is the prepaid insurance credit. See, and I'm still working. Everything's still equal over here. Income tax expense, I know it equals 6,000, but we want to point to it. Okay, and it's good that you stick to a process, because if things go wrong, then you know what you did. Okay, interest expense, I know it equals 20,000, but we're going to point to it. And then interest payable, and depreciation expense, and accumulated depreciation up here in the assets. It's increasing accumulated depreciation, which decreases the building net, because these two accounts are the value of the building. Okay, so now we have to just tally up over here. So this is where your understanding of normal balances matters, because this is going to be a debit balance, the cash account, and the adjusted trial balance. So here you have unadjusted, here are the adjustments, and now we're going to tally everything up. So cash equals beginning cash plus any additional cash minus this. So this is there's no adjusting entry for cash, but I'm just doing this to show you the process. So for all these normal debit balances, it's going to be the same thing. Okay, so here's a debit balance. I'll put this here. Here is retained earnings. Let's see, dividends. So dividends is the same thing. And all these expenses have debit balances. Okay. So all the debit balance formulas are the same, and then all the credit balances formulas are going to be the same, because you're going to start with equal the credit, because it's a normal credit balance had to start with a credit. You're going to minus the debit that's adjusted, which here there's no debit adjusted, and then you're going to add any credit adjustment, which is here 11,806. Now I can take this credit formula and just keep, let's see, all the way down to here, down to there, down to, that's a debit, this is revenues a credit. Okay, so now I have this equal to this, and that's wonderful. Okay. One thing I would like to do, so let's see if it's working. Yes, it's working. So if the debits don't equal credits, I have a conditional format on each total in the credit row, credit column, so that it will show that kind of pink color. So let me show you how to do that real quickly. If you go to home, conditional formatting. Let me see, I'm going to say clear rules from selected cells. So I just cleared the rule from this cell. So now if I put 5,000 in here, nothing happens, okay? So you go up to home, conditional formatting, highlight cell rules. I know the rule that I want isn't here. What I want is the rule that says not equal to, and then I go here where I select this cell. If it's not equal to that cell, they didn't really have any colors I liked, so I want to be over here and maybe like that. That's pretty good. So you can still see the type. Okay, so now if I put 5,000, there you go. Okay, so that's what's happening with that rule. All right, so this is the end of part 3. We've done the normal entries, posted them, the adjusting entries, posted everything to the adjusted trial balance. And here we have our adjusted trial balance, and we're ready to create the financial statements in part 4. And I'll see you over there in just a bit.